Today's complexity demands greater simplicity. Tom Perry. That's exactly what we do here every day in the complex world where it looks like there are a million different things going on that are affecting the market that makes it hard to choose what to do. We hone it all down to simple indicators that work and to the weekly vertical crossovers that work week in, week out, over and over and over again. It is absolutely beautiful to watch and see the simplicity work for us. We keep things as simple as possible, but not simpler. You hear me talk about Occam's razor all the time. It proves itself constantly. You can choose hundreds of indicators. I can pop all the ones up here for you that are available from acceleration bands, ADX, Arun oscillator, average true range, of course the Bollinger Bands that we use, the Chaikin money flow commodity channel index. I can just keep going and going and going and going and going. Why? Let's do what's simple. Let's do what works. Let's not have analysis paralysis. Let's talk about what's going on in these charts. We're going to start with the S&P 500. A rebound today. Can you believe it? What? Things aren't going to go down forever? The economy's not crashing? The stock market's not going under? No, my friends. That's why we're waiting to see how this week's going to end up. And if we have a confirmed weekly vertical crossover going down, and if we do, finding our jumping in point for riding that train. We look at the last weekly vertical crossover that occurred. That occurred when? Back on the week ending the 28th of June. And of course, the last there, I'm going to look at that. The last was 193.03. And of course, where was the highest after that? 302.23, almost $10 higher. Is that a pretty good run over the course of about 4 weeks? Hell yes, it is. An extremely good run. Should you panic right now and jump right in to catch the down move? You don't have to, my friends. Let's let the weekly vertical crossover, if it occurs, which it looks like it's probably going to, but let's wait and see. And then we'll find a jumping in point at the right time. We're not going to catch a falling knife. Market bounded up for the day, 1.4% on the S&P 500. We do see strong down movement. Price percent oscillator is moving down quite strongly. Derivative oscillator still red. Now again, I think it's a little less red than it was prior day, but that's all right. Let's look at the 2-day chart. We see that, things rotated over on that 2-day chart for the candle ending Wednesday and Thursday of last week, the 31st of July and the 1st of August. That was on Thursday. Then we had the Friday and Monday candle. That was a very, very strong down candle. And then, of course, this latest one is just the first day of the latest 2-day candle. It will finish drawing on Wednesday, but it too is down. Derivative oscillator gaining lots of oscillation and down movement. Price percent oscillator heading down. Not as strong an angle as it had been, but still quite strong. We go to the 4-hour chart. What do we see there? That's where we see potentially things bottoming maybe for a little bit. Maybe that's where it is going to bottom and it's going to go up from there. Don't know. Going to wait and see how things settle out. We see up movement in the morning and then sort of peeling off in the afternoon with a green doji, lots of indecision tending up. But again, we can see how the price percent oscillator has flattened out some. Derivative oscillators losing downward momentum. In fact, it peaked in the afternoon on Monday. So again, we'll just watch. That's just the 4-hour chart. Let's see how things sort out. Remember, all the charts, all the time, the charts lead us. We're going to leave now the S&P 500, go to the Nasdaq 100. Tech stocks, they're up exactly the same as the S&P, 1.40%. We do see a red down candle forming. Looks like we'll probably have a crossover going down on the price percent oscillator. at the end of the week. And what do we see going on the derivative oscillator? It's just a little bit negative. And again, don't get overexcited about the down moves. We got time to figure out what's going on. We go to the 2-day chart. What do we see there? Of course, we had the 2-day crossover, same time as the S&P back on the 1st of August. And of course, a big down candle for the following 2 days, first day of this latest one. Again, not reaching the bottom that things had on the prior 2-day candle. Derivative oscillator heading down, price percent oscillator heading down, close to the same. Not quite the same strong angle, but we go to that 4-hour chart where things didn't bottom as low as they did up in the morning, and again that doji in the afternoon. So we'll see how things sort out. It's only the close of the market on Tuesday. We still have 3 more days before that weekly candle is drawn in full. So again, we want to capture the big chunk of solid movement with minimum risk. Could you jump in at any point when things were rocketing down? Sure, you could have. You could have jumped in yesterday afternoon and lost today. So again, we'll let these charts lead us. Charts are where it's at. Okay, now we're back to the weekly, leaving stocks, going to bonds. And folks, remember bonds? Remember our jumping in point on bonds at 136.29 on Friday afternoon at 355 in our experiment? How have we done? Bonds reached a high of 139.98. That's not bad. Up $3 in 2 days? Not bad at all. Not bad at all. Well, actually, yeah, 2 days. So again, is that the high we hit? Yeah, 139. So again, we'll continue to watch, see what there is to see as we see things rocketing up on bonds, up again for the day, 0.80%. We see the price percent oscillator rocketing up even stronger and the derivative oscillator positive. We go to the 2-day chart. What do we see there? Of course, we see another strong 2-day candle after that 2-day crossover on Monday afternoon. Things continuing to move up quite strongly. Derivative oscillator, price percent oscillator. Look at the 4-hour chart. What's that showing us? Up movement in the morning, again in the afternoon. We can probably expect some pairing off at some point of some of this movement, but again, it's beautiful to see. We'll continue to keep our eye on things and see where they go. So 136.29 to a high of 139 is 97 is where it's showing us. So again, not bad. Over $3 in 2 days. Not bad at all. We're going to continue to monitor this and see how this trade goes throughout. Again, what's our goal here at Charting Wealth? To simplify, to make it easy to grab that big chunk of clean money out of the middle. Now, when I say money, we're not a stock calling service. You guys all know we're an education firm. We don't give market advice. We want you to practice trade, and that's what I'm talking about here with the numbers I'm giving you. Excellent practice trade. I want you to practice, because if you don't know what you're doing and you get into the market and you're gambling, I can guarantee you the house always wins. You will be cleaned out, you will be depressed, and you will not be a market trader for very long. That's why we ask you to practice. How do you get to Carnegie Hall? Practice. Let's leave now bonds and go to gold. Who loves gold? I love gold. What's going on with gold? Well, of course, we had that weekly vertical crossover back in June. We look at the high we look at the last after that week where we had the confirmed crossover, the last on Friday, 121.53. How's that worked out for us so far? What's the high of highs? 139.03. 139.03 from 125.46. That's close to $15. Is that okay since June? I'd say that's pretty good. That's the magic of the weekly vertical crossover that we keep talking about, teaching about, asking you to pay attention to. It is a beautiful thing, my friends. Now, there are all sorts of opportunities all throughout this time period for jumping in, jumping out, watching things peel off, watching things pop up. I'm just saying, let's just watch how magical and how important these weekly vertical crossovers are. So, derivative oscillator losing momentum, have a strong week kicking in so far. Go to the 2-day chart, and it crossed over going up back on Monday. And of course, what did we record on Monday? We recorded there toward the end of the day where things were on gold, trying to see how high gold would end up going after we had that 2-day crossover. We'll continue to watch gold, of course, up again for the day, 0.81%. Derivative oscillator still negative on that 2-day chart, but that price percent oscillator has crossed over and continues to move up. And of course, the weekly vertical crossover is still in effect. Let's go to that 4-hour chart. What do we see there? We see that 4-hour chart again continuing to move up. Now, we saw the biggest up movement in the morning. Afternoon paired off a little bit, didn't reach a higher high than the morning did, but the candle itself did go higher. Price percent oscillator heading up, derivative oscillator heading up. It's beautiful to watch. So again, my friends, please continue to monitor these charts every day. Do your practice trades. You'll see the worksheets available in your show notes. Have a special training for you today on liquidity. One of the keys to our success. Why? Because when markets do roll over, like we saw happen recently with stocks, if you are stuck in an illiquid fund of some kind where there's surrender fees, you can't get out, period. I mean, there's all sorts of things that can lock you into illiquid funds. That means when you do have a systemic market crash, when you do have significant problems, why would you want to ride things down? And again, liquidity, one of the keys to our success, it gives us options. It keeps us from losing. The more liquid something is, the easier it is to get out of, to live, to trade, and invest another day than to just get hammered. Okay, attention Patreon supporters. We have a Patreon meeting coming up. It is a week from tomorrow. It is the 14th, and I'll keep reminding you, the 14th of August. It is our Patreon question and answer call-in. It's 12:30 Eastern Daylight Time. I will send an email out to all of our Patreon members. It is a call-in participation question and answer. Please go ahead and start getting your questions to me, Patreon members. I know we've had a lot of stuff going on lately, figuring things out, looking at how profitable we have been over the course of this year for our potential practice trades. And I know you're going to have a lot of questions about our thought processes and where we're going and what we are doing and what we are continuing to figure out as we move forward in this ever-changing marketplace. Want to hear your questions? Fire them off to me, cw@chartingwealth.com. If you want to be a Patreon supporter and get all the special training, the Bitcoin chart, the short chart that we use, the short chart training, the Bitcoin training, how to track Bitcoin if you're interested in that. We have a great training on that. Also our quarterly chart training and all the other things we have to offer Patreon members, in addition to the monthly question and answer session, the chart reviews, when you guys have charts that you want us to look at, especially for you. We're happy to put those together once a month in a video to you. If you're interested in any of those things, become a Patreon supporter. It starts as little as $30 a month. And guess where that money goes? It comes right here into the channel to support the work that we do. The same thing when you buy our book, Charting Your Way to Wealth. You want to know more about what we talk about here. You want to have a speed class on getting up to speed on what we do and understanding what these charts and these markets are all about and what we do here at chartingwealth.com. Buy the book. Buy the book. Look for the link in the show notes. If you live overseas, email me, cw@chartingwealth.com. We'll send you a PayPal invoice. For some reason, Square Up will not allow us to clear your foreign credit card, but PayPal does. So again, look for the link in the show notes, my friends. If you're in the States, we're happy to get the 11th the 11th edition, a signed autographed copy out to you. Just order it online. God bless, my friends. You have questions, problems, concerns, let us hear from you. Be sure to subscribe to our YouTube channel. And of course, if you want all that special training like the liquidity training I talked about today, how do you get it? You simply go to chartingwealth.com, sign up for the email. You'll get every day the daily market review that you're listening to now, once a week the weekly review and forecast, and each day the special trainings we have only for the folks that sign up for our email. We never spam that list. We never share it with anyone. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.